Broadcast is now starting. All attendees are in listen-only mode.
Hey, good morning, folks, and welcome to this month's edition of Market Masters with Westmark Trading. My name is Raleigh White, and I will be your host today for what promises to be a very topical and educational event for all of us. But before we get started, I have a couple of housekeeping notes that I'd like to share with you. First of all, today's session will be recorded, and we're going to send it out to everyone that has registered for this webinar. So no worries there if you miss part of it or whatnot. It will be recorded and all the information will be sent to you. Today's speakers also, they're going to be covering a lot of material, and they prefer to address any questions that you might have at the conclusion of their presentation. But anytime that you've got a question, just type it in the question panel, and we'll be reviewing that. And at the end of the presentation, we'll make sure that all your questions are answered. Lastly, you may want to put your presentation into full screen mode. That gives you a much better viewing experience. Now to the reason that we're all here. We are privileged today to have three of the industry's most well-respected trading and investment experts with us. Rob Booker, Tom Busby, and Troy Epperson have collectively taught thousands of people to become more confident and consistent in their trading and investing activities. Our first speaker today is Rob Booker, and he's going to be talking about finding big trends with missed pivot points. Now, Rob is the host of Traders Podcast on iTunes, and he's the author of a great book called The Adventures of a Currency Trader. In today's presentation, he's going to be sharing how to find bigger trends with missed pivot points, how to time your entry right after that moment of takeoff, and how to identify a false trend breakout and avoiding frustrating losses. So with that, let's just jump right into it, and please join me in welcoming Rob Booker to our webinar.
Hey everybody, so happy to be here together with you. Howdy. I'm going to show my screen. There it is. Boom. See my screen? It's right there. Glad to be with you. Many of you, I think a bunch of you are my friends and members, and glad to have you here. And those of you who have never heard me speak before, I just want to say hello, welcome, happy morning to you. Thanks for spending some time together with me. I'm honored to be here and honored to be introduced by the world famous Raleigh White. And thanks, Raleigh, for having me here. Thanks, George, and everybody at Westmark for putting this thing together. I'm going to talk about pivots as we go through these charts, but it's been on my mind lately that we are going through a moment of market. We're going through a pivotal moment in the market. Here's what we've got going on. I'm going to set the stage here, and hopefully I can draw this picture in your mind. Right now, we've got midterm elections coming up in the United States. We've got huge long-term moves that have been happening on big name stocks like Amazon, on the equity markets, on commodity currencies like the New Zealand dollar that you see right here on the screen in front of you. We seem to be at a moment in time where directional changes sometimes occur. And so in addition to looking at pivot points today, I want to address the fact that we may be at one of those moments where big changes happen. And so with that as the introduction, I want to take a little bit of a deviation from the topic that was shown to you when you signed up, and I want to take a chance on looking at the bigger picture first. So if that's all right with you, I'd love to proceed and do that. Let's take a look, just starting with the one that's in front of us right here, the New Zealand dollar. We've got a whole bunch of missed weekly and even a monthly pivot much higher than where we are right now. Now, for those of you that don't know what a missed pivot is, it's a weekly or a monthly pivot point. A pivot point is yesterday's or last week's or last month's or last year's high plus low plus close added together and then divided by 3. Most of these pivot points are hit. Most of these pivot points are hit every single day, every single week, every single month, every single year. However, occasionally these pivot points are missed. And when they're missed, they become targets later on down the line. When most people have forgotten about them, I haven't forgotten about them, and now you haven't either. If the New Zealand dollar, for instance, takes this moment in time, this pivotal moment in time, and starts to rise and continues a move upward, these pivot points represent stunningly accurate targets for price. And they're so long-term that most people will just ignore them, and they won't even think that price can fall or go that far. Oh, but price can. And in fact, later on in the session, I'll show you some examples of when some financial instruments made enormous moves in the opposite direction they'd been going and then tagged a missed pivot point for a really accurate profit target. All right, so the New Zealand dollar looks like it's poised and ready, and it could possibly begin the process of a multi-month, even a year-long rally. We've broken through a longer-term trend line. This candle is just poking its dear sweet little head right up there and hitting this month's monthly pivot, or last month's monthly pivot, that is. No, this month's monthly pivot. And if we can continue this move upward, we have numbers ahead of us that are way higher. But that's not the end of the story. There are lots of other financial instruments that seem to be setting up for this kind of a move. Here's the daily chart for Bitcoin. Bitcoin, as you know, has been in the news a lot. And there's a lot of naysayers that have been talking about how it'll never recover, the end is near, all the cryptocurrency investors in the world are dead in the water and doomed, whatever. But is that really true? If you look at a longer-term chart right here on the daily, there's really nothing going on, and there hasn't been anything going on for quite some time. And I'm just going to say it. This is the canary in the coal mine. This is the newfound indicator of risk. It's trading in a sideways pattern. It hasn't been going anywhere. Low volatility leads to high volatility. If we wrap some Bollinger Bands around this bad boy, we'd see that the Bollinger Bands are tightening up, that there's Bollinger Bands inside of Keltner channels, inside of a Pandora's box, inside of Lara Croft's Tomb Raider, inside of a question mark, inside of a perplexity and a quantum difficulty. This is scrolling up, winding up, and ready to break out. Now, if it breaks out lower, that's risk off. It means the markets have gone too far in the direction of taking risk. And all these missed pivots below, 4,500, 4,600, 4,100, 3,700, a missed monthly pivot at 2,500. If Bitcoin falls to 2,500, there's going to be a lot of technology professionals in Silicon Valley that are going to need to call, one of those hotlines. A lot of people jumping out of second floor windows in Silicon Valley because they can't build the buildings high enough. A lot of people be really upset if that happens. But those are real targets lower than where we are right now. This is an important, like I said, canary in the coal mine, or indication of what might be to come. When we break out of this range that we're in right now, and the bottom of that range is at 5,800, we break below that bottom of the range, it's risk off across the board, not just on Bitcoin, but on stocks, on Nvidia, on Amazon, on Netflix, on Microsoft, on these stocks that have just been high flying with seemingly zero repercussions, zero retracements of any significance. All right, I'm long Bitcoin at 6,300. I'm thinking of just letting go of that position if we drop below that level, just taking the loss and seeing if I can switch directions, change my mind, and trade this lower. There are a lot of weekly and monthly pivot levels below where we are right now. I'm not sure cryptocurrency is destined for that kind of a move lower, but we've got the targets in place if it starts to do that. Now, what happens if we break out on the other side? It's certainly capable of doing that. If we break out from the top side of that, that would be around 8,400. Let's draw a horizontal line across the tops. We break out above that 8,500 level. We've got a missed weekly pivot at 9,500. We've got the yearly pivot at 11,000. And we've got a missed monthly pivot from February of this year all the way up at 12,300, and that would get hit. If we break out higher, that's where it's going. That's where I'm going to take profit anyway. Now, there's all those people out there in the world that say crypto is going to go to, Bitcoin's going to go to 40,000 or whatever. I'm not worried about that right now. I'm most worried about, in the world of crypto, I'm most worried about Ethereum. Ether has just basically gotten crushed, more so than Bitcoin even. It's really taken a drop. But every single time it prints bullish divergence after those drops, it makes a significant recovery. And look at that. We have bullish Knoxville Divergence down here at the lows. We've got a monthly pivot up at 321, 346, 419. Here's what I'm going to do. Long-term wise, look at all these missed weekly and monthly pivots above where we are right now. Today, remember, trading involves a substantial risk of loss. It's not suitable for all traders, of course. But I want to go long. ETH. This is a trade I want to take. I'm going to jump in here in my wallet today, and I'm going to buy this around 210. All right. So that's my target, 323. I'm going to go long. I wanted to do it right here as we were. Oh, yeah, I can do it right here. I'm going to buy some right now. Okay, I went long. I'm long. That's the first Ether trade I've taken in a very long time. But I love this bullish divergence. My stop loss is going to go below the lows. Remember, past performance is not necessarily indicative of future results. And that's it. Let's look at oil. Seems like oil goes up $10 every year, right? It just seems like it's been in this, even more than $10, but it just seems like it's been from year to year rising. Look at this. So we traded in a range in all of 2017. And that range was on the bottom side 44 and on the top side 55. And then we broke out of that range and we did another measured move higher, and we're at the top of that range right now. And we've got all these missed weekly and monthly pivots lower. I favor a bearish move on oil. We've just hit and smacked up against a missed weekly pivot. It's a perfect time to drop down lower. And we've got even trend lines and all kinds of other things to help us with this trade. Oil seems to me to be setting up for a bearish move lower down to 62. I think that's a reasonable move. It's not a huge move, but I think it's a reasonable move. If we break the highs at 75, then I think not only do we reach 85, I think we go back all the way up into the 90s. Getting to the round number 100 seems a little bit more difficult, but this is a big picture moment. Look, these trends have lasted a long time. We've been moving up more or less in oil since June of 2017. It's time. Let's take a look at gold. Let's type it in correctly so we can look at it. Spot gold. Gold has just gotten walloped, just crushed. Is gold, does it even matter anymore? Does it make any difference what we think about it anymore? Is it still a risk off flight to safety financial instrument? Yeah, it is still all of those things that you always expected it to be. And here's what we've got going on. Pivotal moment down here. We've got bullish divergences. Gold will often blow through divergences like this, like it fell through these divergences. And then it will put in a pin bar, doji, homoji, which is a mix of a hammer and a doji, some kind of a exhaustion low, which we see on the screen right here, and then pop back up. If we break above this trend line, if we break above 1210, 1213, 1214, 1215, I think we are easily getting back to 1270, but I think that's the beginning. And I know this is a bold statement to make, getting back to a multi-year rally. At least to 1460, if not all the way back up to 1900, the high from August of 2011. Now, why would I say something like that? Just do a search for interest rates, Federal Reserve. I think higher interest rates are coming to fight inflation. Inflation is good for gold. It's bad for the stock market. It's good for gold. Higher interest rates, bad for the stock market, good for savings. I think we may have put in a bottom and we may be ready for a multi-month, if not a multi-year rally in gold. All right, you know me as the person who looks at most often the currency markets, and we'll get back to the currency markets, but look at the S&P. Look at all these missed pivots. I can't even go back far enough. I can't even go back far enough. It's so overdone. Look at this. Missed weekly and monthly pivots all the way down. At some point in time, these all get hit. For instance, let's go back to the financial crisis. So during the financial crisis, back in 2008, 2009, we dropped hard and fast, and we missed a yearly pivot. And down in this area, people were hopeless. We printed a bullish Knoxville Divergence a couple of times on the weekly chart. And then we had a multi-year rally, of course. And one of the stops along the way was this missed yearly pivot from 2008 during the financial crisis, a level that some people feared that we would never see again. And of course, it took a few years, but we had a major and significant recovery. Well, what do we have now? We have missed yearly pivots going back to the 2012 yearly pivot, the 2013 yearly pivot, the 2014 yearly pivot, the 2017 yearly pivot. There's going to be a time when the market's correct. It's not going to be pretty, but it's going to happen. This is the 2018 yearly pivot right here. It's already been hit. But if we drop back lower, we have a lot of levels to look for. We've already printed bearish Knoxville Divergence. So I hate to be, someone bad-mouthing the markets. And hey, innocent until proven guilty. But look for a trend line break on the equities. Look for that trend line break, and then look for a drop to yearly pivots, monthly pivots, and weekly pivots that you see below. Now, you may be wondering, how do I get these levels on my charts? This is tradingview.com. And the missed pivots are an indicator inside of, this is not a sales pitch, but it's inside of my indicator package on tradingview.com, which requires a monthly subscription. You can also just pull up pivots on your Thinkorswim. Thinkorswim has garbage pivots. I'm sorry, but whoever built the charting platform for Thinkorswim needs to be thrown out a window. Anyway, TradeStation and other platforms have the pivots. Okay, let's take a look at some of our currencies that we look at from time to time. The biggest one on the list, I think, and the biggest one to look at over the course of the next 12 months is the British pound. The British pound got just walloped on, of course, Brexit votes and whatnot, right? It just got multi-year drop. But it's making higher lows, and I like that. You can see here what comes at the bottom, bullish Knoxville Divergence. Have we reached the point where the technical analysis is showing us that Brexit isn't going to be that big of a deal? Are we in the process of stretching higher to reach back up to missed yearly pivots? Maybe a bunch of these hardline Brexit folks get voted out of office, and maybe the whole thing gets reversed and the British pound just takes a giant leap upward. Is that what this is showing us? I think the possibility is there. I'm bullish the British pound, and I'm bullish up to 3,500, 1.3500, 1.3800, 1.3950, which is the May 2018 missed monthly pivot, and even higher than that. However, if we break below the lows made in August of just a month ago, below 26.50, I think we go back down to the round number $1.20 and much further from there. Watch those numbers. See if we can stay bullish. I just get the feeling that maybe we're due for another boost. Okay. Here's the euro. Remember when we were just talking about Greece and all of those debt-ridden countries constantly, and it seemed like we couldn't talk about anything else? And then that suddenly became less news or less newsworthy? Well, seems like the worst of that might be over. Printing an inverse head and shoulders, shoulder, head, shoulder, breaking above the neckline, and then a measured move that's the same distance from the neckline to the head, higher. That would take us all the way up to the missed monthly pivot from May of 2018 at 1.22. I think that's completely reasonable. I don't like to be bullish on the European bloc of countries. I don't like to be bullish on it because there's so much debt, and it just seems like that's such a terrible idea. So I'll watch for a break below 1.15 and a break below 1.13. And if we break those numbers, then I think we're in and due for and capable of a significant move lower. All right, those are the currencies that I'm most interested in. But I'm going to cycle through all of them real quickly and see if there's anything really overbought or oversold. There's the Australian dollar Swiss franc. This is the Australian dollar Canadian dollar. Broke out of its big range. This is interesting to me. So the Australian dollar Canadian dollar is the most highly correlated currency pair. The Australian dollar and the Canadian dollar are so closely related to each other that every time it drops, it comes back up, and then it drops, and so forth. And we're at the bottom of the range here. This could be the beginning of a multi-month rally. Let's draw a trend line across the tops of these candles. We're hitting that trend line now. If we break above that trend line, then we've got a move up to 95, to the yearly pivot at 99, and maybe the round number 1. Ooh, that's delicious. See what the Australian dollar Japanese yen is doing. Nothing interesting. Australian dollar New Zealand dollar, nothing interesting. Already looked at Bitcoin. Australian dollar US dollar looks bullish. Canadian dollar, I can't see the quote, so let's just see what there we go, Canadian dollar Swiss franc. Canadian dollar Japanese yen, nothing interesting. Swiss yen, oh, check this out. What a neat little trade this could be. On the short-term charts, I might go long only the Swiss yen because we're reaching up to the missed weekly pivot from the first week of February in 2018. That seems like where this wants to go. That's beautiful. Love looking at that. There's Ether. This is the Euro Australian dollar, Euro Canadian dollar, Euro Swiss franc. Ooh, bullish divergence. Yeah, I mean, are we going to go bullish on the euro? Could happen. Got these beautiful targets higher, and we've got bullish divergence right here. Okay, I'm going to mute myself for just. I'm back. Euro pound, don't care. Euro yen, stretching up to a missed weekly pivot. Euro New Zealand, whoa. There's no bearish divergence, but look at this multi-year rally. Holy smokes. I would love to see bearish divergence up here. And then sell it, but we don't have it yet, so I'm going to avoid it. That's the Euro Turkish lira. Whoa. Holy smokes. Turkey's a mess. They just raised their interest rates by 20 points, right? Or whatever it was. This is eventually, the Turkish lira is eventually going to recover, and it is going to make the most significant and crazy drop. Or Turkey will just become a wholly bought subsidiary of Walmart or something. That's the euro. We already looked at that. British pound Canadian, British pound Australian. Pound Swiss looks bullish on that bullish divergence down there at the bottom. Pound yen, don't care. Pound New Zealand, don't care. There's no divergence on there, so I don't care. Pound dollar we looked at. This is the New Zealand dollar, Canadian dollar, commodity against commodity currency. Looks super bullish, but there's no bullish divergence at the bottom here. Anything on the weekly? Nope. Anything on the 240-minute chart? Coming up on a weekly pivot up here, but nothing so stupendously interesting that I would do anything about it. New Zealand Swiss. Bullish divergence. Wow, Swiss looks, across the board, looks poised for weakness. What about the dollar Swiss? That's the only one. The dollar is the only currency that looks like it could potentially be weaker than the Swiss franc. That fascinates me. Dollar Canadian looks like it's trying to get down a little bit lower. And then we'll finish things off with the US dollar Mexican peso. As you know, big fan of that currency. Looks like a head and shoulders pattern. Shoulder, head, shoulder. Could the dollar get really weak? I love selling dollar Mexican peso because you earn interest. Every day you hold that trade, you earn swap and interest on that trade. All right, this is a great time to answer questions. I don't know if we have any, but if we do, this would be a great time for them.
Okay, Rob, let me take a look at the questions in here. Okay, why is, let me see, Leonard asked the question, why is a lower low in price bullish divergence?
Okay, let's take a look at the Euro Swiss. Here we go. And I'll show you, I'll start with the general and move to the specific. So price has been dropping lower, and then you see this divergence line print underneath the bars or the candles. And we would call this bullish divergence. And that's very basic and very general, but it's a great question. So I'll load the chart layout where I describe how this is built. See if I can search for my, there we go, Knoxville setup. And I'll show you how this came about. Okay, so the Euro Swiss is making lower lows on price. But the momentum indicator is making higher lows. What this shows us, Leonard, I didn't mean to say it like that. What this shows us, Leonard, is that even though price was falling, the momentum with which it was falling, or the enthusiasm for bearishness, has dissipated. Not only that, but during that same stretch of time, the relative strength index set to 21 printed oversold. Now, listen, indicators are only as, they're not perfect, and there's all kinds of mistakes. And I know that there are reasonable people who disagree about the effectiveness and validity of overbought, oversold, and other indicators. However, this combination has been really effective over the years. Not, right, it's not special. It's not the best, whatever, all right? I'm not saying any of that crap. That's just, anytime anybody says they invented, you know, new sliced bread, then once again, just throw them out a second-story window. But these divergences are an effective indication that prices may be potentially going to change directions. In this example, price made a higher high, but the momentum made a lower high, and then the relative strength index was also overbought. This is an indication that there may be a reversal. It's an early warning sign, not a guarantee of a potential reversal in price. And I call it Knoxville Divergence because I built the indicator at the Old City Java in Knoxville, Tennessee. I was sitting in this chair right here near the door back in 2013. And that's where I built the indicator. So I was just coding that up for TradeStation back then. Oh, there's my dad. Just kidding, that's not my dad. Okay, anyway, I'm ready for more questions.
So, Rob, was there anything special about that coffee shop that, that brought the Knoxville Divergence all about, or it just happened to be there when it happened?
I was just sitting there with my dad and mom, and we were enjoying some of these delicious pastries, like the sour cream coffee cake. No, so I drove across the country in 2013, and I stayed overnight with traders. I put a call out on my podcast, and I said, "Hey, can I sleep over at your house?" Which, looking back on it now, sounds super creepy and weird. But I did it anyway. And I spent 30 days driving from San Diego, California to New York City. And I stayed with traders along the way. And in Knoxville, Tennessee, I just found myself at this coffee shop and just had a great cappuccino and a pastry. And I was just exhausted from the trip and, coding up an indicator. And I don't know, just everything
just
sort of,
yeah. Well, I've been calling him Leonard. That's his last name. His first name is Jay. Jay said, he's asked a follow-up question. He says, hey, Rob, a few months ago in the Euro CHF, I'm not sure what that is.
Swiss, the Schweizer Franken.
The Schweizer Franken. There were bearish divergences that didn't work.
Yeah. So let's take a look. Now, if you're looking at, let's look back here, for example. So here's what I call a trifecta setup, or a three-pronged approach. Let's just take this. You could call it a failed signal, but that's just so negative. I'm just kidding. Okay, so this bearish divergence didn't lead to a drop. So if you take any signal in and of itself and alone, I think that's possible, but you just have to have a stop loss. I mean, you could short the Euro Swiss right here and make a little profit and put a stop loss above the highs, and you'd have a tight stop and maybe a really big profit target, and you'd be fine. No one would criticize you for that, except some jerk. Or you could take that bearish divergence as an early warning sign, and as I said, not a guarantee that price is going to reverse. You could draw a trend line underneath price, and you could set up a trade if that trend line is broken. You could also, if you're into magic or voodoo, you could draw Fibonacci levels. And you could say, if it breaks below the 23% magical Fibonacci rainbow unicorn level, I'll short it. Actually, I do really like doing that. I have a free YouTube video about Fibonacci and divergence together. And the audio is terrible in that video, but the content is great. That's a way to take it as an early warning sign of a reversal, but not a guarantee, and then wait for a divergence to really break down and show you, as Tom Cruise would say in Jerry Maguire, the money. Thanks, Jay Leonard.
Sure. So from that perspective, I think what you're saying there is that you just can't, there's a number of factors that come into play there. You looked at a potential divergence, you bring some other indicators of things into play, and then you just let your experience and your trading plan, determine if you want to enter or not. You're going to use a stop loss in all cases anyway. And so from that perspective, you make a decision.
So yes, that's the number one way to do it, especially from a longer term chart. Here's my smaller live account that runs a robot that's based on the divergence. And Jay, this doesn't wait for Fibonacci sequences or rainbow unicorns. This one gets a divergence on a 1 minute chart and then immediately takes the trade. And it closes all the trades in the account every single time the equity rises, and it closes all the losing trades, all the winning trades, and it just keeps banking small profits every single day. Bang, 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 bangity, bang, bang. And this doesn't wait for any other kind of confirmation. This account says confirmation is for Catholic 8-year-olds. We're not doing that. We're going long or short immediately on the divergence from the short-term charts. And every time equity rises, We're going to close out all of our open trades, even the losses, and we're taking losses every day, but our profits are making up for it, and we're just cycling through hundreds of trades a month. And this is all based on that same indicator I just showed you, only it's trading from the short-term charts, and it waits for zero confirmation.
I got you.
So
interesting there. And of course, you know, that stimulated another question here. What kind of robot trader is that? And is this something that's available to the public, or is it just a private tool that you use?
So I could put the robots, yeah, I can put they're not even available right now, but I'll put them back up today. There may even be a link on my website that says they're available, but if you just wait, I'll discount them. I raised the price on them, and I didn't want anybody to buy them. I don't care if you ever buy anything from me or not. I just care less. But it is awesome, and it's a lot of fun. And the robot runs on MetaTrader or TradeStation, but better on MetaTrader. It runs on the currency market best, but you can run it on any financial instrument that you want. And these robots, this runs on the 1 minute chart. And I have a 30 lesson class in preparing you to run the robot. And then for robot members, we do a webinar 3 times a week where I look at my live account, we walk through the problems, we talk about the setup and whatever else. But like I said, I don't even have those. I think that my website probably says it's available for sale, but I raised the price so that no one would buy them, and I don't care. But I'll change the price on the other side of this image so that it's more affordable a little bit later today. So yeah, you know, come along for the ride. You know, trade the robots together with me. I hope that answers the question.
Sure, I think it does. Interesting. And then I think one of your clients here or customers, Anup Patel, basically says, I have the robots and they work.
That is super nice of you. Yeah, I know. Anup, it's nice to see you here. Yeah, we have about 500 members working through the robot certification course right now. I put them on sale in August, got a huge group of people. Everybody's getting certified to run the robots, which means they're going to get a certificate that says they went through all the lessons so that I know that they feel comfortable with all the technical stuff.
Okay.
And yeah, and I just, what I learned is there's a lot of technical stuff to get this set up in the first place. And I don't ever want to give anybody the wrong impression. So what we did was we did a whole certification class to get everybody doing exactly the same thing in the same way, so that you could just turn around to your friend and say, hey, listen, I learned how to set up a robot, and here's how you do it. Because what I found is, you know, oftentimes trading isn't really difficult, but a lot of the stuff that you got to do in order to get started trading is difficult. The setup, the management, the what do you do if something goes wrong? Like, all of those are where everybody loses money.
Sure. And I think, once again, just so that we don't drift off topic here, the thing that's really kind of hitting me here, Rob, and one of the reasons why you brought this up, because Jay prompted the question, is that the divergence strategy, you know, can be used a variety of ways. And
Yeah.
you've got a lot of confidence in it, and you use the robot just an example of, hey, here's an automated trading system that doesn't even look for confirmation. It basically sees that divergence, makes a decision at that point in time. And so you've just got reams of statistical information that, that tell you what you should expect. You have an expectation when you enter this trade of its probability of being successful.
Yes, exactly. So yeah, that trading system is exactly, it's been running for 3.5 years. 1,000 traders have been running it. Millions of trades have been processed through it. People have lost a ton of money by running it in ways that was too dangerous. People have made a bunch of money by running it in ways that were more successful. And so all of those, you know, you get the benefit of time and experience and data. You're absolutely right.
All right. Any more questions for Rob? And Rob, thank you for putting your data up here. You've got some, don't call me or I hate you.
Oh yeah, text me anytime. Especially if you want to use Telegram Messenger, and some of you don't know what that is. Telegram Messenger is just a messenger platform like WhatsApp or texting. But if you want to text me, use Telegram Messenger and I'll get the message pretty much immediately. You could also just text me using your regular phone. It might take me a little bit longer to get back to you. Text me anytime. Don't call me. I don't want to talk to anybody on the phone. I hate the phone. But text me anytime. Would love to hear from you.
Super. Last thing is this, Rob, before we move on there, do you have anything that you'd like to leave with the people here? Do you have any kind of a special, or are you basically saying, hey, come to my site, check me out? And
Yeah.
Okay.
So the most important thing that anybody could ever do is, teach yourself and manage your risk. The second most important thing you can do is subscribe to my YouTube channel. This is where I do live trading every day. I post instructional videos. Everything here is free. It's a great way to get started in learning a little bit more about what I do. I'm proud of the work I do here on this channel, and it doesn't cost you a dime. This is a great place to get to know me. If you do jump over to the channel, just hit the subscribe button and the little bell that notifies you when I post a new video. That's a way, even if you don't want to watch my videos, that'd be a way of making my day.
Outstanding. Well, once again, Rob, thank you very much for your time today. We know that you're busy, but you're also passionate, not only about your trading activities, but about the people that you're with and that you care about, and that certainly comes through in your presentation. So thank you very much, and have a great day and have a great rest of the week.
All right, love you all. Thanks for having me. I'll see you around, everybody. Stay tuned. Lots of good speakers coming up.
Outstanding. Okay, folks. Well, we're just going to do a little bit of housekeeping while we bring on the next presenter. And I'm going to pop my screen up here. And as I mentioned, for those of you that were here at the beginning, we're really blessed to have three terrific market experts with us. And the second speaker that's going to be with us today is Tom Busby. And he's going to be talking about a 67% accuracy approach, where he is basically using 4 chart patterns that he believes every trader should fundamentally know. Now, Tom is the founder of Diversified Trading Institute, or short DTI, and for more than 40 plus years, he and his team have helped thousands of students to become better traders. In today's presentation, he's going to be sharing, this one thing, every trader's quandary at any point in time when something is there. Should I go long? Should I go short? Or should I just sit on my hands? And he's going to share with you 4 chart patterns that you need to know to help you with this decision, because essentially he's going to show you how you can at least eliminate one of those choices and increase your accuracy through that process by about 67%. And so with that, please join me in welcoming Tom Busby to our webinar. Tom, I am going to share the screen with you, and I've also let folks know that you're going to address their questions at the end of your presentation. So I've asked them to put the questions in the question panel, and then once you're done, I'll be glad to feed them to you if you're okay with that. So,
hey, Raleigh, it's Adam. Just getting Tom set up real quick, but yeah, that's perfect. We'll be watching for it.
Okay, great. I'm going to go ahead and make you a presenter, Adam, here.
All right, sounds great. See you then. Bye-bye.
All right. Is everything showing up good for you? Raleigh?
I was muted. Yes, everything looks fine there. You might want to put it in viewer mode, but I do see a screen.
All right. You got his first slide up?
Yeah, this says like week open, Tuesday 9:30, current, like a list of stocks.
I gotcha. Let me move it.
I also want to let those folks that joined us a little bit later today that all of these presentations today are being recorded, and we'll edit those and make sure that we send them out to you within a day or so after the conclusion of this webinar. So Adam, I'm seeing like a risk disclaimer.
Yep. All right, I'm going to hand it over to Tom.
All right, sounds great. Thank you.
All right, okay.
Good morning, Tom, and welcome to the webinar.
Hey, thank you. And hello, folks. I hope everybody's having a great day. I know that some days are what we call dream days. I'd call this a dream day. Last night, the market, showed signs it's going up. I'll be able to show you why I knew that. And then where it's going from here. Two important things you got to know as a trader. Have a plan and then follow the plan into execution and the execution into your bank account. Sound good to me? Well, there's risk involved. You got to know about risk. And so we always talk about that. And so I will tell you that you got to look at risk as the total of how much liquid investment capital you have. In other words, you want to divide it. I like to divide it in 10. So if you're talking $100,000, maybe you have 10,000 for a particular strategy that you use. And I just like to divide it by 10, always have, and it works good for me as I'm allocating different money for different things. Now, I've been around a long time, former Air Force officer, active trader since the late 70s, member of the Chicago Mercantile Exchange, still best-selling author, 3 books. Winning the Day Trading Game is a book that I would encourage you to get. It will help you. Wrote it many years ago. I just typed in the link for it. Won't cost you a thing, but I think you'll get a lot out of that book. Everybody tells me it's one of the best books about trading, how to get started, and once you get started, how to survive. And a lot of good chapters in there, and a lot of things I still use to this day. Now, this is where my story really started. I know I started invested 6 years prior, 7 years prior. It's 1987. A lot of people look back on a chart now and they go, look at that little correction there in 87. And every time I see this newspaper, I think about, the 22% drop in the day. Market couldn't handle it at the time, okay? It was just so fast and furious that the market really, the rubber band sort of broke. Well, I got took to the cleaners, I guess, and everybody around me did at the time, 1987. I look back on it today, and probably the best thing that ever happened to me. I was young. I was 35 years old, and if you survive something like that, and you're around 40 years later, you got something to talk about and something to help you with, to help you avoid those kind of things. But let's look at the current market. I've been bullish on the market. I think it's pretty well publicized. Anytime that I've told people what to do, I said, be long, don't be short. And that's a pretty good paying strategy. So the question comes up, when is this party over? I can tell you, based on my experience, based on my opinion, I wouldn't worry about the market correcting, of any nature until we do, say, 2020 or later, okay? That's what I would say, okay? And because of that, you would look at it and say, okay, well, we need to ride this bull as long as it's going to pay. Now, the market itself right now, year to date, has had a tremendous year. It's up, E-minis up about 10%, made new highs today. The Dow's up 7. Wouldn't it have been nice to be long in today's market? Absolutely, we were. NASDAQ up 18%. That's trailing. It's Europe. Crude oil's up. Gold is down. And bonds, I've been telling people all year, bonds the second half of this year should have a pretty good decline. I think it started. I'm actually short bonds right now. Now, month to date, E-mini, we're just getting started. My target in September is 29.69, 29.69. The Dow's up 2.4% for the month. The NASDAQ, I told people, watch this to turn positive. Once it turns positive for the month, then you're going to see a rush of people buying stocks. Stocks like Apple, Amazon, NVIDIA. These kind of companies will soar when that NASDAQ futures turns positive. Crude oil's still up. Bonds are down. Like I said, they're starting to fall off the cliff, and gold is flat. Now, stocks. Apple. We've been long all year on Apple. Done quite well. Netflix was one of our early stars. Hit almost 100% up until they got to earnings, and then they sold off. Amazon, we play it just about every day. Strategies on options. Google, not my favorite stock. Hadn't done that well. And then Tesla, that's sort of stick your foot in the mouth stock, the way I think about it, because they really have been up and down this year. Tore up a lot of people's portfolio. Now, month to date, Apple's down 3%. That's what I'm talking about. If Apple gets above its weekly open, which is around 222.5, you'll see people buying it back up to its monthly open. Netflix, Amazon, Google, and Tesla. Now, what is trading? Well, I guess trading, in the way I think of trading, is you buy something, you sell something, or you sell something and buy something. And the key is keeping your B's less than your S's. Keeping your B's less than your S's. And think of it that way. If I buy something, I want my sell to be higher. So how did I decide to be long, short, or out? That is the question all traders, investors have to get right. Is a process that allows you to get on the right side of the market. Now, I know that sounds harder than it really is. You just got to believe the market when you see it. Now, let me ask this question. Who out there is a chart reader? I always see a bunch of chart readers, okay, where you look at a chart, you see some pattern, whether it's head and shoulders, whether it's a V bottom, whether it's a cup and handle, all that stuff. I don't really do that anymore. I use these three patterns. Number one is a long pattern. That's on a 30-minute chart. Go check it out. If you look at that, like Amazon right now, if you look at Amazon on a 30-minute chart right now, it's giving a buy signal. Or stay out when it's in between, when that current bar is in between, or it's going down, and it does happen where it does go down. These are the kind of things that you look at throughout the day to figure out whether to be long, short, or out. I always talk about connect the dots. Now, if you connect the dots on Apple, it opened the year at 170, opened a month at 183, and currently it was at 191. This is an old chart, but this is how it works. It draws that picture, and that picture is very bullish. So you can see with Apple trading, 219 or 221 today, if you'd have had to connect the dot approach, you'd been way ahead of the crowd. Makes it sort of nice. Now, we do it in numbers too. This is this week's Apple numbers. See that 222.15 number? Watch Apple today and see if we get higher than that. If that happens, then there's an 80% probability Apple will go up and test the 228 number. That can make you some money if you know what you're looking for. Look at Amazon. Amazon right now is approaching its 1954 weekly open. If it gets higher than that, you'll see Amazon soar. Adobe's below weekly and the 930 number on Tuesday, negative. NVIDIA, 275, 277, we're below that. You can see what NVIDIA's doing. So the trading process involves a repeatable, something you can replicate, where you can enter, where your target is, where you're wrong. And then I integrate what's called the put-call ratio. I don't know if you're familiar with that or not, but the put-call ratio checks trader sentiment. You will notice when the put-call ratio gets very high, that presents a buying opportunity. When it gets very low, that's a selling opportunity. Right now, in the current market, I got to tell you, we're pushing the limits on the market as it surges to these new highs. So be careful coming into tomorrow without checking the put-call ratio. And Trend Finder is a tool we have inside our software. So let's talk options. How many of you trade options? I love options. Options give you leverage. They give you the ability to limit your risk. Like that's been in the news lately, Telry, T-L-R-Y. That stock's hard to play even on 100 shares. Yesterday, it had a 140-point movement in one day. But you can do options with it, and that way you got limited exposure for what you're taking on. Now, I have a course that I teach called the Diamond Course. I'm going to give you the meat of that course today. I think you're going to hear things in here you don't hear from anybody else, but it's how it works. It's what I money. Let's get started. Started this course many years ago. We've charged up to $10,000 for the full blown course because it is a money maker. This course is. If you go through this and do my rules on options, you can play options long or you can play options short. If you follow my rules, they work. Let me go through it. You got increased leverage with options. You can buy them, you can sell them. You do combinations. You can profit where the market's going up, going down, or sideways. You can hedge stock positions by selling options against them. For example, let's say Netflix. Netflix last earnings report fell out of bed, but they were paying for a call on Netflix about $40. You had $40 of protection at the current price to hedge yourself. That's a good bet, folks. And it paid off on that day because Netflix dropped $60 right after earnings. Now, it's eventually come back. That option's expired. That's how you can hedge yourself. Or you can buy put options to protect yourself. You can sell options to enter a trade or exit a trade. We got here, a great trader in his own right. He likes to get into all stocks by selling put options and then taking delivery of those puts. Now, terms you got to know: strike price. This is where the deal is struck. This is the price everybody focuses on. With the introduction of weekly options and Monday, Wednesday, Friday options, expiration date has changed over the years. It used to be the third Friday of the month. Now you have in weekly, and like I said, during the week you have options expiring. Now, Delta, that's one of the Greeks I like. And the reason I like Delta, if you're using a big account, you can offset movement. For example, let me just give you an example on the SPY. Right now, the SPY option that I'm long has a 40 delta. Okay, that means that if the SPY goes 1 point, that option is going to go 40 cents. Today, think about this. Today, you ask yourself, how much is the SPY up? Well, if I look at it right now in real time, the SPY is up 215. With a delta of 40, I've got an 80-cent gain minimum in that underlying option. Now, if I wanted to hedge that delta, I would sell the option or sell another option against it. But delta is a good concept, especially if you manage a big portfolio, to use. Of course, there's in the money and out of the money. If I'm buying options, I want to be in the money. If I'm selling options, I want to be out of the money. Now, two ways you got to think about buying and selling options. One is an obligation. The other one's a right. When they take money out of my account, right, I buy a right. But when they give me money, I take on an obligation. That's the way I think about all options. Did money come into my account? Money go out of my account? And then the corresponding right or obligations is associated with it. Now, in a bull market, buy calls, buy stock, sell puts, or bull put spreads. I did a bull put spread yesterday on Amazon that was $100 out of the money. I sold it, and right now I'm trying to buy it back for 11 cents. That's a heck of a return for overnight. Bear markets, you buy puts. Hadn't had much call for this lately, have you? February's about the only month you had call for this. Buying puts, selling calls, or bear call spread. And of course, the sideways market. Iron condors. People get confused for is. Anybody ever play football? You got a field goal post. An iron condor is a strategy you want to hit right in the middle. Think of it that way. You don't want to be too low, you don't want to be too high, you want to be in the middle. That's the way I think of iron condors in strategy. Now, this chart was built for me 40 years ago because I couldn't understand options. I said, I know what happens if I buy stock and it goes up, I make money. So what happens in options, to have the same effect? Well, that's where to buy the calls or to sell the puts. And I know what happens if I short a stock to make money. Remember, keep my sell bigger than my buy? Well, I related options to it, selling calls and buying puts. And this chart helped me years ago when people would start talking about options, understand the results. Even to this day, I use this chart in my head as opposed to years ago, I had it out in front of me when I would do these strategies. Now, here's the inside secret to options. I'm going to show it to you. If you know what a slope is on a chart, a slope means the degree of turn. Notice what happens inside of 30 days towards expiration date. That can be good if you're a seller. That can be bad if you're a buyer. That 30 days, inside that 30 days, that slope curve turns south. As it turns, you better. This is why people lose a lot of money buying options. They don't understand the slope and time decay. But what I did, and I thought was unique, I figured out how to use that to our advantage. So here's my risk rules. You can write them down if you want, but here's the risk rules. If I'm inside that 30 days and I'm buying options, it's pretty simple to me. On day one, that option better be worth at least 80% of what I paid for it. Math-wise, if the option was $1, it better be 80 cents or higher for me to hold it into the next day. That's a very important rule. At the end of day two, I better be profitable in that option. This is a buying of option. If not, I exit by the end of that day. Day three is about as long as I like to hold long options because I'm dealing against that time curve and I want to make sure I'm making money. Now, here's the secret that no one looks at. I figure out where the S&P is going, and then I go with the S&P because 75% of all stocks move with the S&P. 75% of all those stocks move with the S&P, which makes it very helpful to you to know what the S&P is doing. So you ought to ask the question, Tom, do you think the S&P is going to be higher by December? And I would say yes. And then you would say, well, Tom, how much higher? I can show you, if I had enough time, where you can pinpoint the exact high in December based on what's happened. It works about 80% of the time. It's good to know that information. Now, let's go to selling options. I used to tell people I never met an option I didn't want to sell. I love selling options, especially if you like being right. But here's my rules. If I'm selling options and the day is Monday or Tuesday, I'm selling this week's expiration. If the day is Thursday or Friday, I sell next week's expiration. There's a reason for that. I never sell an option without also buying an option. Remember, I'm speculating in options. So all I'm interested in is return on risk, okay? And accuracy, okay? And again, you never sell naked puts unless you want to be put to stock. Now, here's another inside rule. Most people that sell these, I've heard guru after guru, supposed to be known for how good they are selling options. I say, if you're good, you can make money. And so here's my rule that saved me 100 times. I exit selling options by Thursday at the close. Pay me or I'll see you around. I don't wait for Friday and the gyrations that go on Friday in those options. So I exit by Thursday. Believe me, there's plenty of money to go around if you use this rule and you don't have the emotional roller coaster most option traders have by eliminating Friday from those selling options. Now, let me give you some more inside info on options. Years ago, options traded in 16ths, or teenies they called it, less than $3. The computer per day, don't know about years ago, and here's what you'll see. If you can find an option breaking $3, headed higher on the underlying, you'll get a surge in that option. Okay, there's always a natural resistance right at that $3. Okay, so I'm always looking, if I'm buying options, for around that price. Now, if you're selling options, sometimes too good a deal is a bad deal. Let me explain. Let's say we had a $2.50 spread. I wouldn't want to sell that spread for more than 50% of the difference. In other words, $2.50 would be $1.25. So if it was more than $1.25 in premium that I would get, I would avoid selling it. I always want to be inside of 50% of what I'm selling. You'll find out how valuable that little tip was if you do it as many times as I do it. Now, the most important thing that people have to worry about after the age of 50 is the rising cost and a return on their money. You need a return. You can't take your money down to the bank. What does a bank pay? 1% a year? You have to use knowledge. You have to use skill, and you need tools to make sure you stay and make trading a process to avoid the emotions in trading. Okay? That's what you have to do. Now, early on, I realized you had to keep things simple. There's too much around you to try to complicate this process. Let's talk software, just how I did it. I said, there's no software out there in the world that gives me all the information organized in a manner that allows me to make good quality decisions. So you know what I did? I got with a guy years ago, 20 years ago, and built the software that we call the roadmap software today. The roadmap is what DTI is known for. People that have it make money. That's a fact. If you have the roadmap software, learn to use the roadmap software. We've got it so lined up for you. All you have to do is follow our simple rules to follow it on anything you want to trade. You're going to get on the right side more often than not. There's 4 simple patterns I like to focus on. And like I said, I keep things simple. Let's see if you can follow along. How would you like to be 67% accurate out of the chute without very limited knowledge? It does so much more, but just right from day one, this is what you're going to do. That's a buy signal, folks. We have the buy signal identified. We know, remember I told you about the trading process. You got to know where you're entering. You got to know where you're exiting. We got all that in front of you on our unique compass charts. All the metrics you need. When it goes and penetrates into the buy area, you buy it after it's confirmed, and it goes to the target. You can't get any simpler than that. But yes, you can. I'll show you in a second. Now, the buy failure is where it goes into the buy zone. These are your better trades. Where it goes and fails, you get bigger returns for the risk you have to take. Okay? The buy failure. Now, in a bull market, this is the primary one I always look for, and we're in a bull market, is a sell failure. In other words, where the market goes down and then reverses. These are the big trades. This is a trade I did on Monday, if you remember Monday's market, a sell failure. That's why I'm so happy here on Thursday. Big gains because of the sell failure. Sell failure, that's what it looks like. Blue bar, reference bar goes in, reverses, and away we go. Now, learning these patterns and using them in a real market, I also teach in a live market because I think that's the only way to do it. Throw it out there where you can see it in a real market. Alan here said he loves the fact, he's a doctor, he loved me taking emotions out of trading with this. Now, then I got to thinking, some people don't get it. So I went and tested this about what you're going to see on my 6-year-old granddaughter. I said, hey, I want you to learn three things: being long, being short, or being out, and I associate it with colors. This is Tilray. Y'all remember that stock we talked about, Tilray, on Monday? I told people, hey, it's going higher, it's breaking out. The dashboard had it long, okay? It had it long. And what happened? It took off. Easy to see, not to be short. Now, Apple on Monday was about $20 a share. It came down to around 15 off the short signal off the dashboard. These two signals alone are easy to follow, easy to cover any cost of acquiring the roadmap software. They're right there in front. And you can trade any stock that you want to trade. That's to stay out. That was a Monday, not go short, but stay out. Now, let's review. 3 steps for your success. We start with the trading process. We teach that through our software over and over again, over and over again. I'm going to say it one more time. Over and over again, we teach that. Then we connect the dots, starts on Sunday to Monday to Tuesday, and then we use the software itself to guide us. I can look at today's market and tell you that looks fairly decent. Now, at 12:30, we'll look very close at the market. Inside the roadmap at 12:30 is a special time, and we'll know what to do this afternoon. You walk it forward. Okay, whole system. It's got trade management in there. It's got all the education on how to do certain type trades. It's got my favorite module, the 67 accuracy module. It's got a stock scanner. And then we figured out a checklist to get you up to speed fast. We call it the rapid results checklist. Now, benefits and features. Easy to learn. Any account size can benefit. Unlimited use, and there's no monthly subscription. The software itself, design, you can make it in an image you like. The scanner, you'll love it because it goes through all those stocks and tell you the most likely candidates to pay you. The 4 patterns module, I talked about that, and this is one where I want you to start. And then we talk about the global market, certain setups that we developed over the years called the equilibrium trade, the reference bar trade. We go through that. And then, of course, you can give your trading alerts off the software. Trade management gets into where to place, how to place it, when to place it. Then we look at brokers and best broker that's going to fit your criteria. And then where you don't have to sit in front of a machine. I see people all the time looking at a computer. I'm thinking, what are they getting out of it? I did it for years now. I look back on it and think about all that wasted time. The roadmap does it for you. It's watching that market. Rapid results, like I said, for those people that like to go quick, we can go quick. Now, obstacles to join. Do you have to learn the new software? Yes, you do have to learn some simple things about the new software. Does it show you how to trade? Yes, it does. It tells you where to be long, where you're wrong, and what to do. Can you have it on more than one computer? Yes, you can. What is the learning curve? Within the first week, you'll be up to speed. And I say that because we're going to get you into the executive summary of it. Like I said, remember the fact I gave you? Everybody that has a roadmap, that's using the roadmap, listening to what the roadmap's telling us, making money. I tell you something right there. Now, let me introduce you to Jonathan. The thought of loading software on a computer, the thought of getting all that done, I didn't like it. So I hired Jonathan Rowe to take care of that for you. And here's how it works. You turn on your computer, he takes over your computer, he loads the software, bada bing, you're ready to trade. That's the way it should work, folks. I don't want you to spend your time becoming a computer programmer. I want you to spend your time making money. And so Jonathan takes about 5 or 10 minutes, gets it up there. People love it because now they got a resource in Jonathan to help them with other computer issues. Yep, just like I advertised. Took him 7 minutes to get it on his computer. The whole system, all this is included, plus live training. Every Thursday, we changed it from the month to every week. We do it every Thursday at 7:45. We record everything where you can view it at your own convenience, and we're going to give you all the support you need. Now, the price of the roadmap used to be $300. I went to a seminar down in Orlando, I think, and I said, you know, all these people are buying all this stuff and they're not making money. It's time they make money. So I started this year with a new offer that I call my no-brainer offer. Listen up, folks. Here it is. $497. That is the lowest price it's ever in the 20-year history. $497. Why sign up? Because if you sign up today, you'll have it. You'll get today's live training session, and you'll be ready to go. Plus, you will have the team of DTI working for you for all your needs. Now, I hope I gave you enough to make you get this software, because this can change the way you look at things. Okay? So all you have to do is www.dtitrader.com/action. Now, if you sign up today, I will give you a special invitation to hear me talk today at 2:30 in a live market, setting up the trades for tomorrow. That'll pay for it right there. Okay? So make sure you get it in, and Adam will get you loaded. Anybody got any questions? I'll try to answer those. I've enjoyed being with you. Market's done well while I've been sitting here talking. My account's been growing. It's time for your account to grow.
Hey, Tom. Hi, it's Raleigh here. I'm taking a look at the question panel. There's a question here from Brown, and he said, could you share your strategy for Amazon? You mentioned you got in at 0.35. Could you expand on that?
Yeah, if I could show him my roadmap, I'd show it to him. It was in a buy zone. Amazon was. It was above the 1230 number from yesterday. It gave a buy signal yesterday afternoon about 2 o'clock. And so what I did, I looked at Amazon. I took the ATR of Amazon, which, by the way, is $45, and I doubled it, and that was $90. And then I selected an option 2 ATRs away, sold the put, bought a put. My risk capital was $250 per contract, and now I've made 66% from yesterday to the second. In fact, I'm almost to get filled. It's currently, I got an order in to buy it back at 11 cents. It's 17 cents right now.
Wow.
I've only done that trade. I do that trade about 3 times a week. So if you do the math on it and put up in your margin account a couple grand, this 497 is what we call scholarship eligible, meaning we're going to make the money to get your roadmap. People always say, Tom, I got my scholarship. Well, that's what I'm talking about.
That's what you're talking about. Exactly. And then, so there's a follow-up question here from Deborah that says, hey, Tom, on the Amazon trade, would you also consider a long call at the same time with next week's expiration?
No. You want to know why?
Yes, please.
Yeah. I can put $1,000 up doing a put strategy on Amazon and make a percentage gain on the $1,000, somewhere approaching 40% average, okay? If I put the call spread up that she's talking about, it will be a hit and miss the way Amazon trades. It doesn't really argue to do that. I'd rather just buy the stock if I thought it was going up as opposed to buy a call option on it. There's other stocks, though, I would do, like Adobe, NVIDIA, and Apple. I'd do a call option on them, but I wouldn't do it on Amazon.
And Tom, this discussion that we're having right now is this is the kind of discussion that you have with your clients, with your members, right? You sit.
Oh,
and you
absolutely.
talk about yeah.
I am a trader. And as a trader, I love showing people how to make money because the satisfaction I get, it's not from me making money. I'm a grinder. I run a hedge fund, and my hedge fund makes money because I grind. I don't take extraordinary risks. It's all to me about putting $1 up and getting a return off. And I don't like sitting in front of a computer, so I lean towards selling options as opposed to buying options. However, every now and then I like to dance with the devil, and I will buy those options.
Okay, folks, do we have some more questions for Tom? I mean, while you're thinking about that, I just need to give you some perspective from where I sit, having listened to this. I mean, I think you all pretty much get the impression that, Tom's kind of been there and done that. He has seen and experienced so much in his life as a trader and investor. And for him to be able to distill this all down into what he calls a comprehensive package that from his perspective is going to give you what you need to be confident and consistent in trading in the market, I think at $497, that's a great deal. And just being able to talk to Tom and being in on these weekly conversations where you get to ask him questions and he gives you his no-nonsense answer and response, I think that's, once again, you have to determine that's value. But for me, trading and investing can be lonely. Being part of a team, being part of a group with Tom, as being one of the guys that's going to be mentoring you as well as the people in your team, I think it's a hell of a way to go. Sam basically says here, Tom, are there any continuing costs associated with the roadmap, like data fees or something like that?
No, a lot of the brokers were for example, I figured out a way to make money off that too. You want to hear what I do? Like TradeStation. TradeStation works with their data is real good data. It works with us. So I tell people to put a $500 in the TradeStation account and buy a stock like Visa, make them pay you to take their data. Don't you like that idea?
That's
Make
great.
them pay you. Now, go after poll at it. We used to not do ongoing training every week. That's an improvement. We do it every Thursday. We take about a 10-minute topic and turn it into 20 minutes, and we hit you with little small bites of the apple. Or as they say, bites of the elephant, right? Okay, because these become elephant returns after you learn how to do it. Anyway, thank you, Raleigh. Y'all have a good day. And if you got any questions, you can always call here, and I'll be glad to talk to you.
That sounds perfect. Tom, thank you so much for your time today. I know you're a busy guy, and have fun this afternoon. And folks, take advantage of Tom's offer. Join him this afternoon. So really do appreciate that. All right, guys. Well, as they say, the trains are running on time. We're right on schedule, and excited about the next presenter that we've got coming up. And for those of you that may have just joined us a little bit late, everything that you're hearing today is being recorded and will be edited and will be made available to you shortly. I think within a day or two, you're going to get an email from us that's going to have all the copies of the presentations. And let me go ahead and just bring something up here real quickly here. Let me show my screen. And as I mentioned, we're just, I just want to say once again how delighted that I am that we've got three just wonderful subject matter experts available to us as traders and investors today. And our last presenter today, Troy Epperson, is going to be joining us here shortly. I see him here in the room, but I want to give him a little bit of introduction before we get him going. He's going to be here to talk about how to hunt and stalk institutional money for maximum gain. He's got a very, very interesting approach that, once again, I want him to share with you. But he is he's a great guy. He's a top instructor for NOFT traders. He's taught hundreds of students how to use order flow to successfully trade futures and stocks. And in today's presentation, he's going to be talking how you can minimize the learning curve associated with futures trading, because once again, and he'll share it with you, you know, there's some challenges to getting up to speed with this, but he's got an approach here that demystifies some of that. In addition to that, he's going to be showing you a strategy that works well, even for small accounts. And then here's the key. He's going to show you how you can use these techniques to figure out where to enter and to exit the market for maximum gain. In other words, how many you keep as many of those ticks in your favor when you're looking to enter and to exit the market. So with that, I really look forward to having Troy come into the room, and he's going to be joining our webinar right now. So Troy, I'm going to make you a presenter, and that will give you the ability to share your screen, and your microphone is hot. Hey Troy, how you doing?
Good. How are you? Thank you
I'm
for
good.
Thank you for that introduction. Very flattering. Thank you.
Well, I'm impressed, and I just wanted everybody to know that. Hey, just one little housekeeping thing. I've been telling folks, Troy, today that that you've got a lot of material. All the presenters have a lot of material to cover, and that you'll address questions at the end of your presentation. And I'm asking them to type questions in the question panel, and when you're all done, I'll be glad to feed those to you. Are you okay with that?
Sure.
All right, folks. Well, with that, here is Troy, and the floor is now yours.
Well, thank you very much, Raleigh. Actually, Raleigh, I'm really laid back kind of guy, and I take questions even during the presentation. But if you want to hold the questions till the end, that's fine too. We're actually going to be learning some stuff today, and so it's not just a sales pitch. And so because of that, again, I like to take questions all along. So if you want to interrupt me in the middle of something, go right ahead and do that, okay?
Okay.
I'm perfectly
However
happy.
you're most comfortable. Yeah, no problem at all.
Yeah. I feel like it's a lot more authentic to just, you know, take questions as they come in. A lot of times by the time you get to the end of the presentation, if you had a question at the very beginning, you've forgotten your question. So I'll try to answer questions along the way, and Raleigh, just interrupt, no problem. And with that, I'll go ahead and get started. First of all, we're talking about the Order Flow Advantage, which is our on-demand 10-day video course, and it comes with an order flow visualizer tool and an order flow pattern spotter tool. And here is the link for that. It's a $99 product. Now, what's odd about this is that it is a $99 product. It should be a lot higher than that, but it is our introduction into order flow package. Order flow is amazing, and I'm going to show you some of the really cool stuff here in just a second, but you can't teach it in just 10 days. But you're going to get a really good overview of what's going on, and the tool. You can actually use the tool completely. You don't need to upgrade anything. The tool is really good, and I'm going to show you some examples of that. So if you're interested in order flow, here is the link, and I'll show this again at the end. Otherwise, you're not going to hear a lot of pitch stuff from me. I'm not that guy. I'm a trader. I educate kind of as a sideline to the fact that I am a trader. So that being said, let's just go ahead and go in here. So according to the Berkeley Haas School of Business, over 98% of retail traders fail to ever break even. Okay, that's an unbelievably depressing statistic. 98% never even break even using an indicator-based trading system and traditional retail trader methods. That's daunting. And I know a lot of you have probably opened an account and traded until you've lost that small account, and then you go back to work, you work and save again, and then you go through this process. I went through this process in my younger years. I actually had an uncle who put up $1,000 for me. See, that was in 1986, and I lost that $1,000 probably within about a year. Now, obviously, in 1986, $1,000 was, you know, probably like $5,000 today, but it was a great experience. And even though it cost him $1,000, I got some seriously good education from that experience. But it just freaks me out when I see this. 98% of retail traders fail to ever break even. So I sort of say, why does that happen? And I think that you can break this down to the fact that indicators are lagging, and we never get a completely clear picture of what's going on. We are always at a disadvantage. We cannot see what the big boys see. They have the advantage of having their order book in front of them. So they know where buyers and sellers are well in advance of any kind of price movement. We don't have that. Yes, we can look at an order book that's posted, but we don't see their specific order book, and they can choose to make that available publicly or not. And so that's sort of the last place that's left where it's not a level playing field. They have an advantage. We just can't see that stuff. So many times I think this lack of seeing what's going on in the market is the little guy's nemesis. It's just his way of not being able to go there. And so whether you're using a moving average, simple moving average crossover system, doesn't matter what your system is, you are going to be able to dramatically enhance what you are doing by using order flow. Order flow is going to be sort of the missing link, so to speak, to help you decide whether you want to take a trade, whether you want to exit a trade. And the cool part is so a standard moving average crossover is when price goes below the average, you go short. When it goes above the average, you go long. And you can see right here that you had some crossing over, so you had some wasted signals. It finally crossed below hard, and that was an interesting little short there. And hopefully you could have gotten out, and it rolls back up. You think, oh, we're going long. It pokes through, and no, not really. Comes back down. So if you traded this, you'd be in, you're out, you're in, you're out, and it seems like you're always lagging. That being said, here's what that same chart looks like. Here's the average, but this is what we call a footprint chart, and this is showing us the actual contracts that are being traded live. This is directly from time and sales. So on one side we have the bid. Anything that's executed on the bid comes onto the left-hand side. We can see those contracts as they're being executed. On the right-hand side we have the offer side. Anything that's executed on the offer gives us, it puts it in that box. Now, what's particularly interesting now, I know that a lot of you are going, whatever, not a big deal, so what? Well, actually, it is a gigantic thing here, and that is because if you see these numbers are acquired in real time, and this is, if it's acquired on the bid, who is doing what there? Where is the aggression? So if you got an order on the bid, it's a limit. It's a passive buyer. He's just sitting on the limit saying, I will buy it at this price. Well, a aggressive seller comes over and says, I'm not going to wait on the offer for a trade. I'm going to hit the bid. So all action that happens on the bid is aggressive selling, okay? And everything that happens on the offer side is the flip side of that. That's aggressive buying. So now I've got a way of measuring aggression. Now, again, this may be some fairly basic to some of you, but the bottom line is that the passive buyers and the passive sellers don't move price. The only way price moves is somebody has to take out all those sellers so price will go up. So when there's nobody left to sell at that level, price goes up. Consequently, if we hit the bid with a sell order, once those buyers are gone, the price drops. And that's how price movement works. We have to exploit all the buyers and all the sellers at a particular price. Once that happens, price either goes up or price goes down. And this gives us a way to actually measure the aggression. So this is huge, because if I can see in real time where the aggression is, then I can determine. This is a great example. So as this is coming back up, coming up to my moving average, normally I would say, okay, it's crossing the moving average. I want to go long. And if you can look on the inside here, now I will. One of the many things I do, you'll laugh, is I have to erase my drawings because I destroy a perfectly good chart. But as we're moving into this long signal based on a moving average crossover, super basic system, what do we see in the order flow? Well, first of all, we see red number. That's a sell imbalance. We also see what we call a trap. So we have buyers that are trapped as it's going into this entry point. So if I was just looking at this candle right here, I'd be like, no, I am not going to go long. First of all, I've got evidence of sellers, and second, aggressive sellers, and second, I've got a bunch of traders who are trapped up here. So we go to the next bar, and what happens right here? This is, again, remember, this is the aggressive buy side, because it's all this activity is on the offer. And you look at the numbers inside here. So at this price, there was 1,232 contracts. We go up one price, there's 1,076 contracts. Go up another price. Now, that sort of makes sense, right? Because as price gets more expensive, there should be less people willing to buy, right? And it just gets more expensive. So this is sort of interesting to see that this is what? This is buy pressure. And we can actually see that the buy pressure is getting less and less as price goes up. Now, if I'm getting ready to go long here, I don't want to see the fact that the buyers are not stepping up to the plate here. They're not coming in, so to speak. They're not aggressively buying. In fact, there's less of them each time price goes up, to the point of we call this a sequential decline, where the numbers are sequentially declining as price goes up. This is telling us that the buy pressure is getting less. So I have sellers here, and this red number. I've got buyers that are trapped, and on top of that, I can see the buyers just are not kicking this thing up. So my long trade here is very obvious. No, the order flow is not saying that. In fact, the order flow is saying the opposite. What the order flow is saying here is we've got trapped buyers, and we have very little momentum on the buy side. In fact, the buy pressure is actually declining. Therefore, since I see some sellers come in here, there's my trigger to go short. Now I go short. All based on these 3 or 4 candles that are going to help me see what's the true activity that's going on, aggressive buying or aggressive selling. Now, there's all kinds of information that's inside a candle, and I don't want to freak you out with all of that, but there's a lot to this. This is a delta number, or it tells us the net. So this is a measurement of aggression. So on this bar right here, the aggression is positive by a factor of 3,116. We actually net out the aggressive selling versus the aggressive buying, and that gives us this number. So this is at a glance, you can say, what's going on in this bar? Well, I got a decent amount of buying going on here. Now, what's interesting is for the ES, this is the ES 5-minute chart. Whenever you start seeing numbers above 3,000, you're starting to get to sort of not a maximum, but you're certainly getting to a place where it's questionable whether or not buying can be sustained. Okay, now you'll see some really big numbers on the sell side, negative 8,500, 9,300. When you get to the 9,300, you're probably going to be at a bottom here. This is most likely a bottom, because you can't, it's really hard to maintain that continuous amazing amount of selling to keep price going down. So the market will ebb and flow, and this is a way that we can actually see and look at it and determine if we want to take a trade. So the beautiful part about this is we're not asking you to throw out whatever system you're using. Just use the order flow to confirm if you actually want to take a trade that you're getting from your system. So let's take this a little bit farther, and let's go to the next one here. So where do these numbers come from? Well, I don't know if you remember in the late 90s, mid 90s, they had this thing called level 2, and it was really cool. Everybody wanted to do it. That's where the day trader came in and was trading stocks, level 2 information. Well, that information is really hard to read because volumes are so high, particularly on the futures contracts. And so this is a way to take all that level 2 information and filter it down and put it in a way that we can actually read what is going on versus seeing all this stuff over here. So we're not recreating something, we're just redisplaying volume in a way that makes it so we can define aggression with buyers and with sellers. Very, very cool idea. Now, if you're a Fibonacci trader, what do? Well, you measure a run, high to low, and we want it to retrace. And the 38, the 50, and the 61 are the most favorite Fibonacci numbers. And most Fibonacci traders are going to park an order. So they're going to say, I'm going to sell it if it comes up here, or I'm going to sell it here or here. And they'll set an order there, and they'll just wait and see and hope it comes up, and then it retraces off of that level. It's a pretty typical Fibonacci trader system. So looking at Fibonacci, let's go to next. So here's what happened after that. So it came to the 38, and what did it do? If you had an order parked there, you know, you pretty much got run over. You might have made a little bit of money here, but probably got stopped out if you tried to hold this. And yet, if you happen to catch the 50, you had an order parked here, well, then you're all golden. You made some money. The question here is that you never know. It's always a gamble. Is the 38 going to be a turning point? Is the 50 going to be the turning point? Or do I wait till the 61? In this case, it never even got there. So how can we take a fairly simple system and make it substantially better? Well, we can crack open this candle here and see what was going on at the 38 here. Now, I can tell you, because I'm going to show you in just a second, that there was so much momentum coming in here, you would have not let your order get hit. You'd have moved that order up. Okay, and when this thing peaked out, you saw it peak out in the order flow and were able to get an entry somewhere up in here. So confirming your order, confirming your entry with order flow becomes key to enhancing your system. So think about it. If your system is cruising along at 60%, it's right 60% of the time, you take away 1 or 2 losing trades a day, and now you're talking about a 70% system, or maybe even higher, depending on the number of trades that you're doing. So the order flow gives you a way to confirm the trade in real time, and you can then determine if your system, whatever that system is, again, it doesn't matter. I've actually got some examples here. Here is that exact same situation. So we're looking at the 38 fib. So remember, when it came to the 38 fib right here, it just kept on going. If you had an order parked here, you would have gotten stopped out. But look what we've got. We've got deltas that are under 3,000, which tells you that there's good momentum. Okay, there's good momentum coming in here. I do see a seller there, but I don't see how the 2183, 2670, that's going up. So as price went up there was more buyers. Okay, so I'm not getting that sequence showing me that the buy pressure is reducing. So I don't get the sell pressure or the buy pressure reducing until I get all the way over here. There I've got the 2298, 811, 411. Okay, so that's showing me that the buy pressure is going down. Here at the 38, I don't have that. I don't have that. And there are lots of little clues inside each one of these candles that will contribute to whether or not you take the trade at a 38 or at a 50. So very, very cool stuff. My favorite, I'm going to show you some of my favorite patterns. This is sort of free. I'm going to show you some of my favorite patterns, and that is a double top. And they can be intraday double tops, swing bottoms. So this would be a double bottom, double top. This would actually be a triple, but I'm not as excited about triples as I am about doubles. If we had it retested up here somewhere, that would be another double top. Anywhere there's a double top or double bottom, I'm going to be all over that particular trade because it's a high probability pattern all by itself. Now, on top of that, I can see what's going on here and say, yep, I want to take that trade. So let's take a look at what that looks like. So here is that double top right here. What do I have coming in? 2340, 973, 322. And I have a little bit of a seller. So it comes screaming up into this double top. What's this next one? You combine multiple candles here, 1641, 13, 18, 294. Still got positive buying on it, but then at the next bar, it flips over here. We get some negative selling. We don't have, this is actually a trap. It's actually a buy trap right there. So the buyers get trapped up there at the top. And what happens? What is a trap? So this is identifying a sequence here that's showing us that I have a buy trap. This is all the breakout traders that see this double top and they think, ooh, it's going to break out. It's going to break out here. It's going to blow through that high and keep going. Those guys get suckered in. It retraces a couple and then boom, there's, you can actually see where they actually are getting out. Pretty amazing. Pretty amazing. There's where they're getting out, and that just fuels this down run. Love double tops. And you will see this topping pattern over and over again. Look how it went 2203, 2165. So it reduced, 899, reduced, went negative. So, you know, to me, that looks like this. You know, here we're cruising up, lots of buyers. The buyers are slowing down, slowing down, slowing down, slowing down. We get to zero, then it turns over. Okay, you're going to see those kinds of patterns all the time with order flow. Now, you can use the same kind of information for the opposite. So while this is telling us this is a top, these down here are telling us that we may be at a bottom. 2980, 1200, it's getting less positive. It goes positive here, then it goes positive again. Starting to see what's this right here. That's 603 right there. That is a sell trap. So we get sellers that are trapped down here at the bottom. Actually, this is a little minor double bottom. So those are some of my absolute favorite patterns. So we'll see. I got ahead of myself, I think. Yeah, double bottom right there at the bottom. Okay. Again, love it. How do I know it's not going to just blow? I mean, you see some of these bars and they're daunting. Are you really going to buy it down here on this big blow off bar down here? Are you really going to buy it? A lot of people would say, no, I'm going to go short. You know, it's coming down hard. And that would be wrong. This is a reversal bar, and you're going to see that. And that's, again, that's over here, right there. And again, you get trapped traders at these bottoms. Very, very common. So there's a trapped buyers up here, trapped sellers down here, coming in and making the next move up. So it doesn't really matter what you're using, a pattern, a specific pattern, or you're using Fibonacci's, a specific system like a moving average crossover, which is obviously very, very specific but simple. Pivot points, another one. A lot of people will use pivots. They have S1 and S2, so it comes down to this level. It says, do you really want to go long here? Well, you know, if I'm looking at just this bar, I'm not really sure. Look at this bar, I'm really not sure. Maybe I want to go long. I just don't know. Well, I can turn around and put that over here, and I can look here. It comes down hard. Look at these big numbers, 8,500, 9,300, 740. But look, from this high here, we can't get any legs. And what's interesting is there's a huge trap, huge buy trap right there. The buy traps are all clues. You also have a trap right here, big, 2 traps in a row. And that's another pattern within the order flows. When you have 2 or more traps, candle to candle, it's usually screaming that it's not going to go up. In this case, because of the buy trap. And you see these red numbers come in. These are imbalances to the sell side, and they just start coming in. It just starts hammering it. Tremendous. 1,200 or 12,000 is the delta here. Crazy. So, you know, for you guys who are pattern guys, this certainly looks like a bear flag, right? So, you know, it's looking like this. So, this is your flag. This is an upside down flag. You know, a bear flag, a bull flag looks something like maybe like that. This was the opposite of that. And what was it telling you? It was saying, don't go long here at the pivot. Don't go long. If anything, you want to go short because this is confirming the bear flag here. So you can use candlestick patterns and confirm that pattern with the order flow. Again, the order flow becomes the last piece of information that you need whether to pull the trigger or not. Very, very, once you learn how to trade with this, you'll never go back to a regular candlestick chart. You'll just never do it. It's just like seeing, you can suddenly see a whole nother level. You can actually, you know, a lot of people say, oh, I need to feel the market. I need to feel the market. And I say, I need to listen to the market. What is the market telling me? And these are actual contracts that are being executed. So this isn't like the order book or the ladder, the price ladder, where it's just bouncing all over the place, where those orders may or may not be real, right? This is actual executed traded. You're seeing the exchange of thousands and millions of dollars, hundreds and thousands of contracts exchanging. So people are putting money where their mouth is, and that's always going to be the best scenario, is knowing where they're putting their money. What's going on? How can I take advantage of that? Now, by itself, order flow is good, but it's even better when you can enhance it by having pattern recognition, finding reversal areas, turning points. We, by far, I would consider us contra trend traders, and we're looking for these tops. We're looking for the bottoms. Occasionally, we'll take we call this a continuation trade, where it's in a downtrend, it bases. We don't see what we want to see to go long. We do see what we want to see to go short, and we take that trade to continue the trend. So you can use this if you are a trend follower, but it is probably better suited to the contra trend guy. So this is, I actually used to subscribe to a service that would produce entries, and they would email you. In fact, I'm going to show my age here, but when I first did this, it was a pager. You actually had a pager, and it would page, instead of the telephone number to call back, it would page you the entry price. And so this was obviously years ago. So I'm making fun here. There's a special secret line 3, super special secret line 2, and special secret line. So it doesn't matter whether you're using a black box that is generating your entries, and maybe you don't even understand why it's generating an entry. It just gives you a signal, and you just trade it. That's what black box systems do. They won't tell you how they figure it out, because they don't want you to know, and they want you to continue to subscribe to their service. But what a great way to preface your trades with their signals in a way that allows you to confirm, yes, I want to do this. No, I don't. I still love special secret line number 1, but do I really want to trade it? Well, you can see on this bar right here, that's a pretty aggressive bar going to the upside. And I'll be willing to bet you that if we look at the order flow in here, we're going to see some screaming momentum coming in right in here, and you're not going to go. Maybe this is probably a short signal. I don't know. I'm guessing this would probably be a long signal. This is probably a long signal that the system is generating, and you'll be able to tell whether the order flow confirms that that signal's any good or not. So this is secret line number 1, and you can see right there in the middle of the candle, what do we have? We've got green numbers. For starters, that means it's a buy imbalance. A buy imbalance means what's highlighted in green. It means that there is 300% more aggression that's happening on the offer side versus the bid side, which is, of course, the aggressive sellers. And you can see these numbers: 1062, 1276, 3507. Those are getting bigger. Those numbers are getting bigger. So if you're sitting here with a sell order because your special secret line number 1 says this is a sell spot, there is no chance in you know where that I'm going to even come close to shorting it here. Why? There's way too much momentum coming in. Way too much momentum. Not going to do it. Also got a giant delta there. If I'm going to go short, I'm going to wait till it peaks out. I'm going to wait till I see sellers start to come in, like over here. I'm going to wait till I have a trap up here at the top. Okay, then I'm going to shoot at a short. Special secret line, always a very compelling thing. When I used to get those pages and I would literally fall over myself trying to get to the computer or try to get to a phone. In those days, there was some online trading in those days, but there was minimal. We still did a lot of phone stuff to the brokers. Oh, I got a super secret line number 1. I'm going to short it. No, you really wouldn't want to do that once you look at the order flow. Now, let's paraphrase this, okay? So maybe these guys are looking for a swing trade. Well, maybe this is a good entry. Maybe it's a good entry. If we look way in the future, maybe the price went down. But look at all this heat you're going to have to take from here to here. It's what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 ticks. Okay, that's not gigantic, but guess what? The average little guy can only tolerate 7 to 10 ticks, and he's going to bail out. Okay, we have small accounts. We don't have the ability to give it 20 ticks. I wish we did, but let's face it, most of us are trading with small accounts. I can't risk that much money on one trade. If I have several in a row, I'm done. So when you're managing a small account, you have to be even more concerned about where the best entry is. Even if this in the long run might be a really great entry, we can't handle 13 ticks of heat. Again, wait and see what the order flow says. Does the order flow confirm that this is a good spot to enter? In this case, no. So I've got some others here that are a super secret line here, coming back down to it. Now, if that super secret line, this is a long trade. I don't know if it's a long trade. Again, I'm assuming it's not. I'm assuming it's a short trade. You would not go short here. You would go long. Sequential decline, buyers, a trap, more buyers, another trap, more buyers. All these guys are coming in. Even there's another sequential decline right there, and more buyers. 1, 2, 3. There's 4 candles here that are sort of screaming at you to go do what? Not go short, but to go long. So it's a very again, the majority of the time, you're going to see at least 2 candles, if not 3 or 4 candles that together give you the information that you need to pull the trigger at a particular point, whether that point is a Fibonacci, a super secret line number 1, or whatever. So you can see that this is sort of opening your eyes and being able to see the flow as it's happening in real time. I got one more example here. Again, super secret line, you're coming into it here, and from right here all the way to there, there's a 5 levels where the sellers are accelerating. There's more aggression coming in. 931, 1300, 1700, 1750, 20. You're not going to go long here. You're not going to go long here. Even if the super secret line says go long here, not going to do it. The order flow says no, I don't want to do that. Again, think about it. If every single day you took away just one losing trade, so your average losing trade's $100, so you save $100 every day. You do that 5 days a week. Now you've saved 500. Now you've saved 2,000 in a month. You can see where this is going. Save 2,000 a month, 12 months, 24,000 a year, and that's only saving yourself one trade a day. $24,000 at the end of the year is a lot when you're on a small account. It's that ability to confirm a trade and not get run over. I can tell you, I used to be a fib trader, and I was like, I swear, every time I put an order at the 50% fib, it went to the 61. And every time I put it up to 61, it blew through it. And I'm sitting here going, you know, or it blows through it by 7 ticks, and I've got a 6-tick stop. How many of us have experienced that scenario? No more. Okay, you don't have to do that. You can watch the momentum as it's happening in real time and pull the trigger when it's appropriate to pull the trigger. Now, it's not rocket science, okay? It doesn't have to be. You can make this much simpler, and you'll see that from that, I'm going to go back here. There's color codes, there's red numbers, there's numbers on top, there's numbers on the bottom, there's green numbers. There's ways to make this so it's not complicated, so that you can actually do very, very well with a limited amount of training. We have a 10-day course. By the end of that 10-day course, you will understand how order flow works and how you can adapt it to any system. I love this slide because I always think old way, new way. Old way is the what? The old candlestick, the old moving average, right? Where you're let's face it, at every trade you're sort of gambling. Is it going to go here? Is it going to turn? Is this a good entry? You can take so much of that away by using the order flow and watching how it paints the picture in a totally different way than what the chart does. So remember that sometimes, you know, this is a green bar. If that's all you're seeing is 3 green bars in a row, are you going to go short there? Most likely not. When you get down to a bottom, you've seen all these red bars coming down here. I'm not going long. Are you out of your mind? That changes when you can actually see what's happening. You see the flow changed. Okay, we see buyers coming in. And what's even more amazing is you guys who are price action guys, guess what? Volume comes in before price moves. Let me repeat that. Volume will come in prior to price moving. Okay, you got to take out those buyers. You got to take out those sellers, and it'll sit there, and you'll see the volume come in, but price hasn't moved. So you're going to see the volume come in before price moves. When you see that, you'll actually, as a pure price action guy, you'll be in front of your other fellow price action traders. You'll be in front of the curve due to the fact you can see the volume coming in prior to price movement. Very cool stuff. So cut off the T. Say, I can. I don't have to wring my, I don't have any hair on the top of my head. I've lost it all. But that being said, you don't have to be freaking out. You can sit back and know with some confidence that the things that you're seeing are showing you a true picture of what the market is doing, and you're going to be on that front edge of it. Order flow advantage, $99. Here is the link right here, and hopefully Raleigh can stick that link in the chat for me. You get the visualizer tool, which is the one that we were looking. We didn't even have time today to look at the pattern spotter tool, but that is also a tool that you get with this. 99 bucks introduction. What we want you to do is see how great order flow is, and then from that point, sure, we have an upgrade, absolutely, no question, but you don't have to buy that. There is enough advantage. You can buy this one tool with the education, and you are off to the races. I'll be happy to answer questions at this point. That's all I got.
Here. Hey, thank you, Troy, for that fantastic presentation. I'm looking at the question panel. There's not many in here. Sean asked a question. Technical question. Does this work with Apple? Is this Apple compatible?
It is. Good question. It is not Apple compatible. Okay, we do not. This is futures and forex are the two asset classes that this works for. So for stocks, it is not there yet.
Oh, I'm sorry. I think the question is, does it work on an Apple computer?
Oh, yes, it does, but we don't recommend that. If you have a good emulator, a PC emulator, it will run. So we have some people who are running it on Macs, but it is specifically designed for PC.
For a Windows type application. Okay,
That
so
is
if somebody's
correct.
got boot camp or something like that, they can work with it. All right, good question. Well, I'm going to wait for a few other questions to come in here. I certainly had some. Is there once again just a fantastic view on the market? The charts that you were basically using in order flow, were those 5-minute bars that you were looking at?
There were some examples that were 5-minute. Most of our examples are actually 7-minute, which is
okay, 7. Yeah, interesting.
Yeah, kind of a different take. And if I'll go back, let's go back to here. This is a 7-minute. Okay, right there.
Oh yeah.
And,
okay.
And what's particularly interesting is that what you want to see with an order flow chart is you want to see a candle that has enough information that it's diagnostic, but not too much information. And so, like for instance, and this is maybe not the best chart to show this, but some candles will be smaller, and if they only have like 6 price levels or 4 price levels, it's not enough information. And so then you'll go up in time to get a bigger candle. But you don't want to be too big. So like I would not use a 10-minute. A 10-minute will stretch these bars. These bars will be even bigger. And you want to kind of have that Goldilocks place where it's just right. And 7 is really our primary recommendation for the ES. Now, if it's a faster market like like say CL or crude oil or the Nasdaq, the N,
or gold or something, yeah.
Or gold, yeah. Actually, gold really works well on a 7-minute, but crude oil works on a 3-minute really well, and the Nasdaq we actually run it on a 2-minute.
Oh wow, okay.
It's so much more volatile, and the price movement, the candle. You don't want giant candles. It's hard enough to read, and if you make this bigger, it gets, it's information overload. It's hard to decipher what's going on. The bigger that candle is, again, the sweet spot's about 12 to 15 price levels.
Okay, interesting. So from that point, folks, as you can hear what Troy was just saying here, I mean, they actually have recommendations as to the optimum settings depending on the market that you're trading. I also noticed just looking at this chart that you have there sort of like in an outline, the actual candle itself. And I am not, I am not an expert on candle chart patterns or things of that nature. But have you found, Troy, from your perspective, that order flow, does it tend to support some of the popular candlestick patterns that people see? Or do you just basically disconnect those altogether and just look purely at the order flow information?
No, that's a great, you're absolutely right. So here's the top of the wick. There's the body of the candle. You can see it's outlined in green. So there's the body, and then this is the wick on the bottom,
right,
or the tail of the candle. Well, the patterns, most candle patterns are at least 2 to 3 candles. Okay, so you wouldn't say this is whatever pattern is until this one was finished. What the advantage of the order flow is, we're getting in much closer to the turning point than even a candlestick pattern person, because they're not recognized. They're not able to recognize the pattern until after this bar. So on bar, if this is bar 1, this is bar 2. Most of them are going to be waiting in somewhere in here to get an entry. Well, I'm in down here. So the patterns that, the really great patterns, are the bullish engulfing patterns, the piercing pattern, the Hermione's, the dark cloud cover, just to name a few, an evening star. Those
spinning tops and all
exactly, spinning tops. Those patterns are all still valid, but what you're seeing here is you're seeing how that pattern is actually built. And you're getting to see it in real time. Whereas if you're just a candlestick trader, you're really handcuffed until at least this bar here closes. And really, if you're looking for like a bullish engulfing or something like that, you have to wait until this one closes. Well, then you're getting in up here. Well, that still might be a great place to get in, but you'd much rather be in down here, right?
Absolutely. No, that's fascinating. Sheldon asked a question here. He said, hey, Troy, does this work with Thinkorswim?
It's a great question. If you have a Thinkorswim account, I believe you're able to access NinjaTrader. This is we've got this for 2 platforms. We have it for NinjaTrader and I think Thinkorswim has a deal with NinjaTrader, so you can trade through Thinkorswim, but use NinjaTrader and TradeStation. Those are the 2 platforms that this is available for.
Okay.
And it is primarily futures and forex.
Okay.
It will work on ETFs, but it doesn't really work on like Google would be the stock would be a really bad example. The pricing information is not pretty, and there's technical difficulties there. But futures, forex, that's really where you want to be. You could do ETFs if you're a stock trader and you want to trade ETFs. You could adapt this to ETFs, and we do have clients doing that. Okay. Because once they learn this, learn how
they're going to look at the whole world as an order flow process.
Exactly. Very much so.
Okay, let's see.
And let me just go back to my final slide here and just remind, this is an introductory course. This is for $99 you're getting just a really good value. I get more positive comments from this 10-day course than any other course that we have. It covers basic stuff, but it really shows you how to peel the blindfold off and see what's going on inside that candle, not just the candle itself, but inside the candle. So very cool.
So that for that $99, you get the course, and you're also getting a license to the software?
Yes, that is correct.
Absolutely. Okay, and just to repeat here, it works with NinjaTrader, it works with TradeStation, and it may work with Thinkorswim or some other platforms that can work within the Ninja or the TradeStation ecosystems.
Yes, that is correct.
Okay. Fantastic. Any other questions here for Troy while we have him? All right. Well, I tell you what, Troy, thank you so much for coming in today. I'm going to take over the screen just for a moment and wrap some things up. Let's see here, show my screen. And let me go ahead and make this. So, and I really want to thank everybody for coming today. And in particular, I want to thank our presenters, Rob Booker and Tom Busby and Troy Epperson, for the time that they took, not only to come in. Oh, okay. We're showing the wrong screen. Let me do this. You're seeing my Washington Post, so you get to see the news here. Thank you, Harry, for that. Let me see how I do this. I'm just going to move this over here, go like this, and then do this. There we go. Okay, well, pardon me for that little technical glitch, but I do want to once again thank you all for coming today. Thank our speakers for the time that they took to not only prepare their information, but to present it today. The whole idea here at Westmark Trading is to give you all opportunities on a monthly basis to interact with some of the industry's best educators, traders, and investors, and they will freely share with you their favorite techniques for how they like to trade the markets, and with the idea that they want you to become more confident and consistent. If you remember what Troy said right at the beginning there, the amazing number, 98%, of people that traders, they don't even break even. That's remarkable churn. And so you've got guys like Troy and Tom and Rob that are sitting there basically going, that's unacceptable, folks. There are techniques, there are strategies, and there are things that can be deployed that can help you to become consistent as a trader. And there's a number of factors that will contribute to their success, to your success as a trader, and they're prepared to provide some direction for you in that regard. So once again, thank you all for coming. And thanks to the speakers. Everything was recorded today, and we'll be getting that out to you shortly. So with that, folks, take care, trade safe, and we'll talk to you next month.